the street is divided when it comes to India's story because, sure, you can talk about the demographic dividend, given the population, the youth of it, and so on. But at the same time, if you're really drilling down to the use cases of AI, the humanoid robotics and physical AI, it could actually sort of replace or take away that demographic dividend going for Indian markets. So do you think that it's a little too mature for that kind of conversation at this point, or do you see a story there?
Well, the Indian story has always been wonderful for the reasons that you mentioned, and also for another reason you didn't mention, which is it's got some of the highest quality corporates anywhere around our part of the world. There are some very, very, very strong management teams executing there. So I think that will not finish. That will persist. Then it's a matter of which business models are going to work and which business models aren't going to work. And I think a number of us feel a little bit insecure about the role that AI can play in our lives going forward. But I think it's going to facilitate an awful lot of activity rather than replacing people in the immediate term. So in India, I think what you need to focus on is first execution, because the story's always been great, but getting things done in India isn't always straightforward. Second, valuation, because it started to look quite expensive. And then really enjoying the quality of the corporate sector there, because as mentioned, you've got a lot of the best management teams in the region based in India.
Do we need to take into account or worry about U.S. tariffs on India, because that doesn't seem to have been resolved?
Hasn't been resolved. I think it's certainly a concern, but of all of the markets that I think around the region which rely on exports, India is nowhere near the top of the list. And I used to live in India, and even when I lived in India, most of the things that my kids owned were made in China. So I think that the sort of, the world's exposure to the Indian manufacturing sector is not the biggest thing to worry about there.
Okay, how are you feeling about Japan? We've noted that yesterday record high, today yet another record high, and it seemed to happen sort of in the blink of an eye, right? Some of this could be slow summer, Oban up there, and thinner volumes, which can lead to volatility and spikes like this. But there are positive tariff reasons to like Japan as well.
Well, fundamentally, the reason to like Japan is twofold. You've got the corporate governance story around Abenomics and the way that that has now morphed into sort of peer pressure-led desire to change amongst Japanese companies. That's very, very significant. And then the other thing, of course, is that after deflation, for as long as you and I can remember, we now appear to be moving into a period of positive inflation. And by positive inflation, I'm drawing the distinction between inflation which is negative for discretionary income and inflation which is positive for it because workers start getting paid more.
Demand pull is what you're talking about, right?
Exactly. And I was in Japan just a couple of weeks ago, and what's striking is how many non-Japanese people are now visibly in the workforce. So this is a tight labour market, and that argues well for higher wages, which means that you see inflation moving into higher wages, higher ability for consumer to spend, which is then good for the corporate sector.
And the other thing, just on a valuation basis, the S&P is up at a record high, right? It's about 22 times right now. Japan is sub 20. It's good value.
I would say that our whole region here looks relatively good value compared to the US. Now, the US has got a lot of good companies, and the US is very, very good at capitalism and stock markets, so we will celebrate that. But the global investment community kind of understands that already. A lot of our clients are very exposed to US equities. Valuations, as you say, are relatively unforgiving. So I think the question now is, at the margin, where do people want to commit extra capital? And here in Asia, we've got something quite counter-cyclical going on, either because of the Abenomics and the value-up programs, or because China's economy is doing something quite different than Western economies have been doing since COVID. And then also, of course, we've got the value story, we've got all of the companies to invest in, and we're not an over-owned region, so I think that's really very positive.
Are there a lot of arbitrage, are you seeing more and more arbitrage opportunities in Japan as creative destruction takes hold of their M&A?
Oh, well, we've had more, we've got a long-standing Japanese PM who's had more companies in his portfolio bid for in the last 18 months than the previous 18 years put together. So absolutely that's happening. Now, not all M&A is good, and sometimes you want to be in the recipient of the bid rather than the people making the offer, and execution is often a challenge. But anything there which is taking capacity out of the system and which is focused on generating higher returns is clearly something that we should be positive about.